Bitcoin puts you in a position where you actually can reach retirement level of assets much more quickly because it grows so much more quickly. The same approach applies as to whether or not you are starting your career at 22 and you're trying to retire by the time that you're 30. This can't grow in an exponential type nature forever. There has to be a degradation in the amount of absolute Bitcoin that you can secure. But the value of that Bitcoin that's secured early can compound in ways that is kind of unfathomable to a lot of people. What is the math behind an emergency fund? I don't think people actually run the numbers on this. They just take this as like, okay, this is a good idea. I should hold, $30,000 worth of cash. Being small, being new, and being something that has like a ratchet effect on people's brains, where like once you understand Bitcoin, you don't really go back. If you're not going to outperform Bitcoin, why would you own these treasury stocks? It makes no sense. Everything's great. Yeah, absolutely. I've been just grinding through this bear market that we've been running through for the last couple of years. I'm ready for the bull market to get started.
It's weird because like we are up like, I don't know, 50%, 40%, 60%. I don't know exactly how much we are up in the last 60 minutes in the last 12 months. But the sentiment is down a lot. Like even when we were up like 100% the last 12 months, the sentiment was very down, and it just feels like a bear market.
It really does.
But we are up here. Like it's like we won the last 12 months, I guess.
Yeah, I don't know exactly when this thing is going to turn around, but I certainly don't feel like we are on the precipice of some type of like deep bear market in price. It's just a bear market in sentiment and activity. Like the chain is desolate. There's no activity there. There's no enthusiasm. I mean, I even see it on, the conversations that I have with prospective clients and clients at Unchained. It's just, there's not really that much urgency. People aren't kind of on the edge of their seat clamoring to get Bitcoin exposure, it feels like to me, or worried about the security of their Bitcoin, quite as much. So hopefully that changes but I think the thing that will change it is the price. The price kind of cures all things. If we start getting a nice run up into 150,000 and beyond, which I think is entirely possible by the end of this year, then I think, hopefully that will lead to a little bit more enthusiasm. Otherwise, maybe we are just destined to grind higher over the series of the next 10 years until people just kind of give in and just have to, start reaching FOMO and running toward the exit door, which is Bitcoin.
And I just want to bring it up because like we're posting it like 1-2 weeks after we actually recorded. So just to have like context of like where we stand today. And I always like to look at like 6 months, where we are in the past 6 months, 22% up, the year to date, 15% up, then 1 year, 60% up, and then 5 years is like 724% up. So every metric that is somehow long term. I mean, 6 months I actually don't consider long term. Like I usually start with like 1 year. It's kind of starting medium term, and like 5 years starting to like be a great thing. Everything under 5 years is kind of short term. But it's interesting. You look at that and you're like, oh yeah, like why aren't people more excited about it? And I feel like I have this weird feeling. I'm curious what you think about that. Maybe we are just entering a new era of Bitcoin where people are less hyped and also less sad about it. It's just like slowly grinding up. Or do you feel like that blow off tops was like this excitement will come back?
I'm still of the mindset that the blow off top will happen at some point. I think that, there's a certain point in people's psyche where they just can't take the pain of not being involved anymore. But right now, nobody's really even paying attention, which is very strange. I just never thought, looking back a few years ago, that we would be at 110,000 or 120,000 or even 100,000 or whatever. And people wouldn't be just like clamoring for Bitcoin, that there would just be so little enthusiasm in the market. But again, like I guess it is a good thing, right? Like if people are not paying attention, that means that there's probably plenty of upside and not a whole lot of downside there. And what we've seen, I think, every time the price does pump, there's quickly a buildup of leverage, and then that leverage quickly gets wiped out. You know, we haven't had until we see that like kind of stretched out enthusiasm and just massive price runs where there's more and more leverage able to be built up over a longer period of time. I don't think that we are in a position where we can have a very deep and long drawn out actual bear market in the price. I think we have a bear market in sentiment that is kind of offsetting the bull market in the absolute price that we're seeing that you're just pointing out there. And you know, at some point, like the macro headwinds or tailwinds that we all expect to come from election year in the U.S. and the Fed lowering rates and just the deficits continuing to blow out, and the gold trade showing all of that. That all has to come back to Bitcoin. So that's still my base expectation, and we'll see what kind of timeline it actually takes to play out there.
Yeah, and it's also interesting because one of my theories is that like because the pockets that are now into Bitcoin are less panicked than the pockets that came into Bitcoin like 2011, 2013, 2015, even like 2017, meaning that we now have companies that are bigger that just like buy and like they're more price agnostic. They just like have a plan to accumulate Bitcoin. We now also have more data, so even like the people that are in Bitcoin might also just be already know about this ups and downs and be more ready for it, and just be like DCA is also something that's such a big meme that's just kind of like maybe people are just like now doing that more and more, but I don't really know. Like I for some reason I miss almost those like exciting times and this very bearish times. Like I wrote Bitcoin from I think 2020, like it was like 5k up in the highs of to 69k, and then I wrote it down again to 16k, and then up again to over 100k. It is such an amazing experience doing that, and I kind of miss that, and I hope it comes back. But at some point, probably Bitcoin will be super boring and just like very stable. But I think we're not yet there yet, as you said.
Yeah, on the one hand, you see just a lot of normalization around at least my social circle. It's much more common for people to say, "Oh yeah, I own a little bit of Bitcoin," whether that's through the ETF and just Bitcoin exposure, or actually holding, you know, real Bitcoin, or even holding their own keys. You know, it's just you're not weird by bringing up the topic. And in fact, like most people, obviously, because you know they know that I am a bit Bitcoiner and work in the Bitcoin space and all of that. I get that question a lot, like, "Oh, how's it going?" You know, but it's very common, I think, for people to own Bitcoin now, or at least have some Bitcoin exposure. It's not weird at all. But at the same time, like people are not just like banging down the door in the way that we've seen with like this gold trade, and like these pictures of people lining up in Australia or whatever to get exposure to gold right at the top of at least this local move. Like that's something that we just have not seen, even with the amount of bullish action on the price that has happened over the last couple of years in this, you know, technical bull market, but enthusiasm bear market. I think it will change though. I think human nature does not shift, you know, significantly over time. The fact that we are able to see this like huge 25% move in gold, which is a massive market relative to Bitcoin, and just straight melt up type of price action, like that should portend that there's plenty of upside to Bitcoin as and when people start to turn their attention to it. And they just haven't yet.
How do you actually look at the gold moves? Like gold was a super surprising asset for me in 2025 that it went up so crazy. And I think in year to date 2025 it even outperformed Bitcoin. I'm not sure about like the exact data, but like it really went really great this year, and it's completely surprised me.
Yeah, I think it has outperformed Bitcoin in that short time period, which, you know, gold bugs will very happily point out. I know this will come out in a couple of weeks, but this week's Fire BTC is kind of jumping on the gold conversation because, you know, I'd put out some posts out there just talking about kind of the irony of gold bugs using the internet to dunk on Bitcoiners for their short term, beating of Bitcoin in terms of price. But why is it happening? Well, it's happening because the world is going through a very prominent change in the way that it views U.S. treasuries and the U.S. in terms of its global reach and hegemony. That does not mean that the U.S. is going to we're just going to wake up one day and it's no longer a superpower, but there definitely has been a gradual shift away from a US centric global model and more toward this multipolar world that I think a lot of people talk about. And, a lot of that was kind of kicked into high gear when the US sanctioned Russia away from SWIFT and cut them off at the knees in terms of their US Treasury access. And you have to look at other geopolitical players and say, well, why wouldn't they start considering other avenues for moving their exposure to the US away from the US? And historically speaking, US Treasuries has kind of sat at the foundation of the global monetary and financial system. It has been the global reserve asset. And gold was that previously. Well, now, central banks and governments, they're already set up to own gold. They already understand it. These are like older people who are boomers that understand gold much more than they understand Bitcoin. And so I think their natural inclination is to say, okay, well, we need to move to a more sovereign asset that we can own that is not dependent on US hegemony. And gold is kind of like the obvious choice for doing that. And then, Bitcoin is still just so small, even relative to gold now. It's a $2 trillion asset. Gold is now a $30 trillion asset. Well, all of that capital that needs to move away from US treasuries or move into these sovereign type assets, it needs a place that has enough liquidity and depth to be able to absorb it. And Bitcoin just isn't big enough yet for those flows to actually be to be absorbed in a way that's not like kind of we think of it as constructive to the price, but for them, it's kind of destructive to the price because you're just funneling all of this capital into something that would just move higher so significantly. And so I think it's a combination of all of those things where people they're looking for ways to hedge their exposure to the U.S. There's a momentum that gold has had just because of its historical standing and the fact that people already kind of understand what it is, how to buy it, and how to hold it, that Bitcoin just doesn't enjoy yet. But that doesn't mean that it's not part of the conversation. I think we will see over the next 10 years that gold versus Bitcoin allocation starts to even out, and that obviously is very bullish for the price.
Yeah, it's almost like the gold is the old school fire alarm for how bad the current financial system is doing. And Bitcoin is the new fire alarm that just kind of gets built, which is so in any, like we both agree, and like most of the audience here also probably agrees, like in all the ways that Bitcoin is better than gold. And actually, like I was kind of shocked because I think a lot of gold bugs actually now starting to pay attention to Bitcoin. And I see it in my comments, I see it in my replies, even in chat when I do live streams, where people say like, oh, like don't dunk on gold. It's like the predecessor to Bitcoin and all of that. And I'm like, yeah, of course, like there's a lot of like, I have respect to gold, but it's just a commodity. And now you also have to realize that there's a new kid on the block that's just so much better in any way. It's almost saying like when the car kind of replaced the horse, saying like, oh, don't disrespect the horse. I'm not disrespecting the horse. It's just time for the car now. and so it's kind of fun seeing that difference between gold and Bitcoin. And there's this great chart, I think Jesse Myers, and he does 2023 and 2025. He compared the size of the markets, and he kind of showed that gold and Bitcoin are the only two things that really were growing in the last 2 years of a big asset. And the other things like bonds and money kind of lost to them. Real estate also won a little bit, but like gold and Bitcoin were the big asset chunks that actually won. And so it's really interesting for me to just like live in that time and kind of observe what's going on with the fire alarms of the system.
Well, look, and I'm looking right now at the S&P 500 versus gold chart, and I mean, right now it is flat all the way going back to uh, July, let's say, of 2015. It's like there's been so much hype around the stock market and seeing it hit all-time highs and all of that, but when you measure it versus gold, which has no cash flows, has no productivity, as they say, has no intrinsic value, although the gold bugs will say, oh yeah, it does have intrinsic value, that doesn't actually exist. But it's pretty incredible that you could have just held gold and done just as well as stocks, if not better, depending on like how and when you are allocating to those assets. I think that breaks a lot of people's brains. It's this idea that, oh no, Warren Buffett is very famous for this. He's like, oh, never want to hold gold because it's not a productive asset. Okay, but if the value of the assets that you do own is primarily driven by monetary debasement and not actual productivity, then what are you accomplishing here aside from having to be kind of a stock picker, or just creating a whole bunch of extra counterparty risk or risk to individual companies or management and all the other types of like operational risk that you have when you own stocks, especially if you own individual companies.
Yeah, I couldn't find it quickly, but there I showed just last week at a conference. I gave a small keynote on that topic, and I showed the real estate prices measured in US dollar. Obviously everything goes up. Then real estate prices measured in gold, then you can see it is more flat, but it still goes down over time, depending on the time frame. If you like go all the way back to 1900s, like there's like some upturns also. But if you go the last like 20, 30 years, like it's all going down on a trend basis. And then you look at the real estate prices in Bitcoin, no matter what time frame, it's just tremendous. Of like we went from, I think it started 2011 with like 400,000, 500,000 Bitcoin for an average US medium home, went down to like a few thousand, a few hundred, and now we had like 3, 4, 5 Bitcoin, whatever the kind of current number is. And so you can see, and that's why I was like, people get really upset at me if I say like, oh, you will buy a great house for like 0.1 Bitcoin. And I'm like, just look at what happened the last 10 years. And you're like, like this just has to continue that way, and it's just a matter of time till this actually happens. It's just like, okay, like at some point it has to actually happen. So it's interesting for me.
I think in their defense, Robin, it is still a fairly short period of time that Bitcoin has been around, and the vast majority of those gains that you're referring to relative to real estate or gold or the S&P or whatever did happen early on in Bitcoin's life when it was so small, right? Like it didn't take a whole lot of capital for it to move up by thousands of percent. And so I don't know that that's necessarily a fair comparison. I think now when you're talking about a 10-year time frame, or a 5 to 10-year time frame, at that point it's starting to become a lot more relevant, and you can still see the degradation in the value of these other assets relative to Bitcoin when you go on those shorter time frames. What we need to see, or what we expect to see, is that trend does continue, and that Bitcoin is still appreciating at a much faster rate relative to these other assets. And I think, in 5 years' time, in 10 years' time, assuming that things play out the way that we expect, we'll be able to make a much more compelling case when we show real estate versus Bitcoin, gold versus Bitcoin, stocks versus Bitcoin, because you can filter out all of that early kind of noise for what it is and still make a very compelling case on the outperformance of Bitcoin, and that assets will always lose value versus it. We all know that's intrinsically true because of the fact that Bitcoin is perfectly fixed in supply, and so it has to go up over time. And more and more people coming into the space are always going to create a little bit of a faster appreciation than other assets because it's more of like a novelty advantage that Bitcoin has. It's just that, being small, being new, and being something that has like a ratchet effect on people's brains, where like once you understand Bitcoin, you don't really go back. Like you don't grok Bitcoin and then say, oh no, now all of a sudden this doesn't make any sense to me. I think there are extraordinarily few cases of that playing out that way.
Yeah, it is a fair point of like, it is a lot easier to go from like a $10 million market cap to $100 million market cap than it is from like a $2 trillion market cap to a $200 trillion market cap. Even though it's like the same X, it's like a 10X, but like it just takes, or it's not it would be 20 trillion, not 200 trillion. But it takes a lot more purchasing power. And that's why I also like when we started about talking in the beginning of like how the blow off tops of Bitcoin, it's just like Bitcoin now moves differently because like there's a lot more purchasing power in Bitcoin. George Boudin made the comparison of Bitcoin that we started as a speedboat in like 2017 and 2015. And now we're slowly moving towards being like an aircraft carrier that's just like way more stable and like harder to move. But also when it's moving in a direction, it's like really hard to stop. And so I find that kind of interesting. But I still feel like we are way earlier than people think. Like I think that aircraft carrier comparison is kind of breaking down. I still feel like we're a normal boat. Like,
this is why it's also so important. This is why it's also so important to do everything you can to build your stack as quickly as possible, as early as possible, because like, and this is just general compounding nature, is that the longer you are holding your Bitcoin and the more sats that you can buy at lower prices, the more and more the speed of that compounding, really accelerates for you and your personal wealth, right? So if we're just talking about like personal strategy, personal wealth, it's always better to have more Bitcoin today than to accumulate that Bitcoin over time, because the natural BTC yield that you're getting on the amount that you can stack is always going to go down, because we're talking about a fixed supply asset. It's just, this can't grow in an exponential type nature forever. There has to be a degradation in the amount of absolute Bitcoin that you can secure. But the value of that Bitcoin that's secured early can compound in ways that is kind of unfathomable to a lot of people. But that takes like early and very intentional stacking in those early days. I call this the stacking sprint in my newsletter, where like if you're really focused for like a 4-year time horizon and just are doing everything you can to stack as quickly and as much as possible, at that point you can kind of let that compounding take care of the rest of the journey for you, and you can start to actually let off the gas, because this concept of BTC yield being so much lower, as you're saying, it's so much harder to add an extra Bitcoin to your stack now than it used to be 10 years ago when the price was so much lower.
And I think everyone can kind of relate to that who has been stacking for like 4 or 5 years or longer than that. In the beginning, you like added the Bitcoin units so quickly, and then in the end, it's like it almost doesn't make a difference if you add more more to the Bitcoin, just because it got so much, like the Bitcoin price ran out quicker than your salary did.
Yeah, absolutely. And just comparing units to units, right? Like if you own, let's say you have 10 Bitcoin, right? Adding an extra 10 million sats is not really going to be that additive to your long-term like wealth prospects, right? Whereas if you own just 10 million sats and you add another 10 million sats, well, now you've doubled your long-term wealth prospects there, right? So it's hugely impactful to add that extra 10 million sats if you're only starting from 10 million sats as a starting point, right?
Very, very true. I want to also talk about one thing, because I see it now happening in the Bitcoin community, even like from like self-custody companies, from all types of companies, that people are switching to treasury companies, like the kind of the trend that people are like saying, hey, like we want to work in treasury companies. How do you look at treasury companies in general, and how they kind of impact the Bitcoin philosophy?
I think it's a strange thing, to be perfectly honest. You know, it like when strategy, formerly MicroStrategy, started with all this, it came about very organically. You know, it was like, hey, Seyr decided Bitcoin's the best asset to own. I've got this operating company. We're going to take some operating cash flows and just plow all of that into Bitcoin. And any new cash flows that we have, we're going to buy Bitcoin and we're going to use that as our like primary treasury reserve asset. Great. And then it's like, okay, well, we should try to front run as much of this accumulation as we possibly can because you know we're very much limited in the amount of Bitcoin that we can buy if we're only relying on cash flows. But hey, we've got this access to the capital markets based on the fact that we're a public company, and we should leverage that in the pursuit of adding more Bitcoin. So then they start issuing, you know, convertible bonds and equity and all of this, and before you know it, they've created this like monster of a company that is much more like an actual just Bitcoin hedge fund than it is any kind of operating business. But where it starts to get weird is when you get these treasury companies that their sole purpose is uh, just to buy Bitcoin and just to basically be that hedge fund, and in a much more inorganic way, right? And I say inorganic in that like it's not actually building a Bitcoin business or a business with a Bitcoin treasury. It's building an actual Bitcoin treasury company. I think there's like a strong distinction there that we need to make. And what we saw was a lot of enthusiasm coming off of the success from strategy and the way that they approached this that was attempting to translate into other treasury companies, but wasn't, but, and that started to play out in a very favorable way for the people who were buying the stock. But the enthusiasm for that kind of waned and the bubble, so to speak, popped. And all of a sudden, people who were buying these other treasury companies that are like further down the curve were doing so at a very, very high premium. And I don't think that the retail focused people or the people from that retail contingent who were buying these stocks really understood just how much of a premium they were paying for that Bitcoin exposure, and how hard it would be to overcome the amount of premium they were paying over a long period of time. Because again, like that BTC yield has a natural compression to it, just based off of like pure math. And if you're buying things like Metaplanet in June at 9x multiple, well, you need very, very strong BTC yield over a long period of time in order to even break even relative to just buying Bitcoin. And then when you get a little bit of a bear market or a lack of enthusiasm in that, and that premium compresses, it becomes like very, very difficult to actually outperform just buying Bitcoin. And what you're trading for that potential Bitcoin exposure is stock exposure with a whole bunch of layers of counterparty risk and other types of management risk. And I just don't think people were able to quantify that. They were just kind of swept up in the buzz of the day. But I do have a newsletter article talking about IMNEV madness back in June of this past year, and just kind of laying out the math for people, trying to help educate on like, what does this actually look like when you put it down on paper? And what actually needs to happen for you to outperform Bitcoin when you're buying these treasury stocks, which, let's be honest, that's the only reason that you should do this, right? If you're not going to outperform Bitcoin, why would you own these treasury stocks? It makes no sense. That is your benchmark. That's the way that your benchmark always should be as a Bitcoiner. That's your hurdle rate, as people say. And so you need to be able to outperform Bitcoin by a substantial margin, enough to offset the incremental risk that you're taking by owning any other company or stock or real estate investment or what have you. And if you're not able to do that, then I think you need to look at yourself and say, oh, well, this was obviously either a poorly timed investment or a bad investment overall. So that's how I kind of think about it.
Yeah, it's like you have more risks because basically you have this. I very much look at Bitcoin as a risk-less asset, like as a risk-less asset that just doesn't has inherent risk. But even if you say like Bitcoin has risk, in that comparison is like you have the risks of Bitcoin plus the risk of the stock and the management team and like all the risks that are associated with that. and you get less sovereignty.
Yeah.
And so you would need to outperform Bitcoin like 50, 60%, maybe even 100% to kind of make sure of like, I get compensated for the less sovereignty I get and the more risk I take on for it.
It's a very big trade-off, and I don't think people were necessarily thinking about that. What saddens me more or worries me more is people coming into the space directly through those treasury companies before they own any Bitcoin. Like, I think it's okay, like I've got some exposure to strategy, but like I think that's okay because the vast majority of my Bitcoin exposure is through just hard cold sats, in my own self custody. And then I've got this little sweetener thing on there that maybe it works out, maybe it doesn't, but it's not actually going to really impact my prospects for my future wealth, right? Whereas some people were coming in and saying, okay, well, I'm a Bitcoiner now. Look at how much strategy stock I own or Metaplanet or whatever. And they don't own a single actual sat to their name, which means they don't understand the actual value proposition of Bitcoin. And I hope that the people who got burned with that didn't get burned too badly, so that they can actually start, stacking sats before they start stacking these stocks.
The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use simplemining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean. No account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today, and you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need.
100%. Just buy Bitcoin in self-custody and don't be fancy with it. Like that's what I say always. Like own
Look, man,
UTXOs.
50-60% CAGR should be like good enough for you, I think. Like you can do very well for yourself if you just stay humble and stack sats.
I mean, this is also what I tell people in crypto, because people are saying, oh, like Bitcoin does only 50-60 CAGR. And I'm like, if a 50% CAGR per year is not good enough for you, you have an income problem, not an where I put my money problem. Like if you if your savings rate or like your like surplus cash is not enough to really make an impact with a 50% CAGR over 10, 20 years, you have an income problem and not like where do I save my money. And that's, I guess, like why we have a lot of young people into this crypto meme tokens.
Yeah, I wonder how much of this is driven by just like a false perception of other people doing well in these types of things also. It's like I think a lot of people get their news and their information from X and from social media, and it's very difficult a lot of times, at least it's difficult for me, to separate the actual signal from the noise of people who are just kind of self-promoting or engagement farming or whatever, right? Like people I constantly see people in like the personal finance world, in like the FIRE world, and in the Bitcoin world or whatever, like showing screenshots of their portfolio and how much it made or lost or doing all this stuff. But like you can just generate that in ChatGPT fairly easily. There's no way for you to verify that what these people are saying and how much money they made on these trades actually happened. So you just have to be very careful that you're not getting emotionally swept up in the FOMO of seeing other people succeed when there's no actual like real hard evidence that you can verify for yourself that that's actually happening. It could all be completely fabricated. And I'm certainly subject to it as well. Like it's when the market is doing what it did with strategy, a year ago, it's very difficult to be immune from feeling a little bit of FOMO, like, oh, I need this exposure. Like, what if it goes 10x, like everybody's saying it's going to go from here and completely outperforms Bitcoin? It's very difficult to restrain yourself from doing that, or from like hopping on that bandwagon. But I think that kind of comes just from time and experience, in taking a long-term approach to building personal wealth and making sure that you are making decisions that work for you and how you feel about the allocations that you're doing and what your actual goals are, which might be very different from the other people that you're following or seeing on these social media platforms.
Yeah, and even if we assume everyone is super honest and all the screenshots are true, even then you have the problem of how many people will actually post how much money they lost on a project versus how many people will post if they make a lot of money from a project. And so you see the highlights, the best of the best, the few people that made money, and not the 99% of people that lost money. That's assuming everyone is honest, which I don't think everyone is.
Yeah, absolutely. I mean, people have an incentive to share their winners and hide their losers, and to hype up the things that they want you to see and downplay the things that they don't want you to see. It's natural. It's not like that's anything specifically nefarious about any individual person. It just is the natural inclination that we all have as human beings. And so you just need to be aware of that. I like to give people the benefit of the doubt, right? If at all possible. So I don't think this is something like there's so many malicious people out there trying to scam. There are those people, of course, but for the most people part, I think it's just the natural inclination that you want to share your winners and hide your losers. I feel that push and pull as well, and you just try to have to navigate that with that self-knowledge in place.
One topic you kind of suggested in the beginning is the emergency fund that is a controversial topic in Bitcoin itself. Let's talk first, like for the few people that might not know what this is. Like, what is this even? Like, what's the importance of that, and how should a Bitcoiner kind of look at an emergency fund?
Well, I think that an emergency fund is something that has been around as a concept for a very long time, especially in like personal finance circles. And the idea is, hey, if you've got 6 months, let's say, worth of your expenses held in cash in a savings account, maybe that savings account pays you a yield of 4% or something like that, right? It's kind of nominal gains that you're losing to inflation, but hey, you've got this cash that's available in case you lose your job. I challenge this concept in a couple of different ways. The first is that, look, if you have zero wealth, if you're just starting out, the idea of an emergency fund for a month or so kind of makes a little bit more sense. Because it's like, hey, I'm going to build up a little bit of a cash buffer in case in this interim time period where I'm just now starting to actually save, I lose my job, I lose my income, and I can't do any of that. Okay, great. That makes a little bit more sense to me. But the further along you go in your journey, the less and less holding any large amount of cash makes any sense. I think people, they kind of bifurcate the way that they think about their different assets in this like safe cash thing that I can use for emergencies. And then they're like, okay, well, I've got this savings investment portfolio that I shouldn't touch if at all possible. And I think that's the wrong way to think about it. If you were sitting, let's say you're sitting, you're a mid-career and you're sitting on $3 million worth of liquid assets like stocks and Bitcoin, some combination there, right? Hopefully it's closer to 100% Bitcoin than it is to 0%. But regardless of what that looks like, you've got a $3 million emergency fund. And the chances of you actually needing to draw down that entire $3 million, as somebody who's living a fairly standard lifestyle, if you were to lose your job or lose your income, is basically zero. And so I want people to think about, not only saving for retirement or saving to build a nest egg or whatever, but that can operate as a dual emergency fund. And it's okay to have to tap into that, if something that is unforeseen happens, whether you lose income, you have some kind of medical emergency expense, or whatever the case is, it's okay to do that. And that the opportunity cost of not being like 100 or close to 100% allocated is actually very, very big over a short period or over a long period of time. And that when you're thinking about the probability of these terrible scenarios playing out, you can actually put some handicapping on there and some math around that to give you a sense of what that opportunity cost looks like. So that's what I really dig into in this very recent newsletter article, is like, what is the math behind an emergency fund? I don't think people actually run the numbers on this. They just take this as like, okay, this is a good idea. I should hold $30,000 worth of cash, which is 6 months worth of my expenses, or $60,000 worth of cash, which is 6 months worth of my expenses. And that's just the prudent thing to do. I actually think it's the opposite. I think it's a very like fear focused way to approach things. It's leaving a whole lot of money on the table. And the last thing I'll say before pausing here is that when you are earlier in your wealth building journey, it's actually much more important that you have that $30,000 or $60,000 invested, or in the form of Bitcoin or stocks, if you don't want to be 100% Bitcoin, than it is to hold it in cash and have it there melting away. It's much more important to start that compounding journey as early as possible than it is to like build up this cash buffer before you start investing. So think of this in a dual purpose, and you're going to end up in all likelihood way wealthier and have way more means to deal with any kind of emergencies than you would otherwise.
Yeah, like emergency fund, it never made sense for me, but I'm very young also. So I always look at like if you're 27, like I live alone, I like pay everything myself. But I was like, even if, because I had that moment in when I was 25 of like, do I go now into podcasting and do I go all in here and risk my safe job that I already have since like 6 years and do this podcasting thing? And when it came down to like, what if I lose everything? I can live comfortably for some time on my Bitcoin. This was number one. And even if I don't, even if in that sense the podcast and Bitcoin goes to zero at the same time, which is highly unlikely, but like just like thinking about that is like, oh yeah, just like can sleep at a friend's place for like a few months till I get another job. Like it also in like we are so fear based, but we don't really get into like, okay, let's assume the worst. What is happening? Oh yeah, like I still breathe. It's like I am still okay, and I can still do this. And so I feel like if you never risk anything to make money, you will never make money, kind of a thing. And if you dive deeper into Bitcoin, you actually find that that's the least riskiest thing you can do. Just that you have to bear with volatility, and as long as you have an income, like why not? Like just do that. Maybe it is different if you're retired already, like and you are big on this retirement topic. So like maybe it's actually interesting. I had a different question, but now it came up in my mind of like, do you have any difference between me as a 27-year-old that just starts out and accumulates Bitcoin and is very aggressive with it and just like has 100% in Bitcoin versus someone that is, let's say, 67 and is retired since 2 years and has and wants to be into Bitcoin? Is there like a difference for you in like allocation and like planning for things?
Listen, I know the default answer here is, oh, you should be less risk averse, or you should be more risk averse as you get older and you're closer to retirement and you need to be living off of your assets. And my general sentiment here is that that's not the case. That the math and the compounding and the way that all this stuff works regardless of how old you are. And that the mistake that you're making if you are 67 and just now starting to save for retirement or don't have enough, the mistake there is not that you are allocating too risky or whatever. And by risky, I just mean like going into a more volatile asset like Bitcoin as opposed to stocks or bonds or some kind of like income yielding thing. The mistake was already made earlier in life. And forgive me for using the term mistake, because maybe that is like not generous enough for a lot of people. A lot of people, they are not brought up or they are not in circumstances where they realize that they should even be focusing on all of these things. But if you wake up one day and you're 67 and you've got, $50,000 to your name and that's it after working for 40 years, and then you decide, okay, well, I want to retire. Well, the same approach applies as to whether or not you are starting your career at 22 and you're trying to retire by the time that you're 30, right? You got 8 years or 8 to 10 years to build up a nest egg or an investment portfolio that you can live off of. And whether you're starting at 22 or starting at 67, that doesn't matter. Now, if you've gone through your years, 40 working years of saving and investing and creating a savings portfolio that is large enough to actually fund that retirement, then it should be also large enough, just by the way that all of this works, to have you be able to live off of without going into bonds and therefore, capping your upside or creating a lot of just, negative real yield across the rest of your life and whatever you would be able to hand off to future generations. So that's the way that I think about it. I think about it as the mechanics are the same regardless of your age. I would rather be 67 with a much higher net worth and still have it be volatile than be 67 and switch to bonds. Whereas I go forward and I know exactly what I'm going to have in terms of like income coming off of that, but I'm building a whole lot less wealth that I can pass on to my family or even enjoy, 5 years later or 10 years later, assuming that I live that long. Did that make sense?
Yeah, 100%. And it's also interesting because I'm way more focused now on building capital than building income. Like, it's more
I think
interesting.
Income is a red herring. I think income is a red herring. Like the income that you, in my mind, income generation should come from the work that you do or the businesses that you're building. It should not come from the investments that you make, because the income that comes from investments that you make, I realize there's a little bit of overlap there if you're talking about a business, but just bear with me here, right? Like, if you are, Robin, building this podcast, this media company that you've got, you're doing work with your own human capital to generate productive assets that can bring in money that you can then use for savings investments, right? Those savings investments should be focused on a total return profile, not an income profile. And the faster that you get to a large portfolio held in liquid assets, and the more and more you can rely on that balance sheet growth to fund the expenses that you have, as opposed to having to rely on income. You can create income from selling your assets, and that is okay. And that is actually optimal, typically speaking, from a tax perspective, and it's optimal from a long-term growth of your wealth perspective as well. Any income that you're getting from investments that you're making is coming at the expense of future long-term wealth. If you're getting dividends from stocks that you own, you're forcing yourself to sell exposure to that company early and taking cash instead. What would you rather have? Exposure to the stock market growing at 10% a year, or exposure to cash that is melting at 7% a year? There's a 17% differential there, right? And so it doesn't make sense that you would involuntarily subject yourself, so to speak, to selling an asset on a regular basis, whether you need that cash or not. It's much more optimal to have faster growing assets that you can peel off by selling down or borrowing against when you need to fund your expenses, as opposed to being a forced seller through something like a dividend or any other income generation stream. That's my view.
I love that, because like people are also obsessed with cash flow, and I'm always saying like, if you sell an asset, it's also cash flow. It's like
Exactly.
everything is cash flow, and
Yep.
not just like an income.
A
And
dividend
for me,
is a dividend that you're receiving is selling the asset. It's just that you're being forced to sell it, and somebody else is controlling that timeline and the amount that you're getting, right? As opposed to you being in full control over it, in terms of the timeline, in terms of the amount, and in terms of like what that value can get to before you start selling down.
always looked, and I mean, this is more about stock investing than Bitcoin, but I because I was previously in stock picking before I started being in Bitcoin, and I looked into stocks, and I always looked at dividends as a kind of a thing where this company stopped being extremely aggressive and reinvesting in themselves because they no longer have a great idea where to put more money in, or like what else to expand in the business. And so they're like, oh, like just give it back to investors. A dividend was always a sign for me that the company kind of stops growing, in a sense. I don't know if this is fair, but this is kind of how I look at it.
Absolutely. They're not reinvesting that cash in order to grow the business faster. They're giving it back to you. They're trading future growth for cash now. That is what you're doing when you're receiving a dividend.
It's super interesting. I want to, before we come to the end routines of the podcast, I want to look at the retirement topic in general. I think it's such an. I mean, we did cover it, I think, quite well already in the last two episodes. So I made this episode a little bit off topic from the retirement today, but I still want to keep it in because I think it's a very important topic, and also a topic that a lot of people are extremely interested in. I mean, a lot of people care about finances just to no longer have to care about finances, if you know what I mean. So, how do you look at retiring or retirement on Bitcoin? And I think you also make this amazing connection with the FIRE community, which is not that into Bitcoin yet, I guess.
All right, I paused there because I need to plug my computer in. Somehow I thought it wasn't, so you can clip this. Sorry about that, man. I just realized it wasn't plugged in, and I was like seeing red on my battery there. Okay,
it's a scary thing. The battery is gone.
Right, exactly. Okay, so the specific question is what, and then I'll kind of pause so that you can clip it in.
It's two kind of things. The first is kind of the connection from Bitcoin on retirement with the FIRE community that you make. But more important is like, how should a Bitcoiner who has like Bitcoin and most of his money is in Bitcoin, how should he look into retirement, and what is kind of important there to like kind of note?
Yeah. So the connection that I make between Bitcoin and FIRE is one where, the FIRE community, which stands for Financial Independence, Retire Early, they kind of intuitively understand that the monetary system and the financial system is broken, that the money itself is broken, and that it constantly loses value. And that's why they are such staunch advocates for being very intentional with their spending and then investing that money into assets like the stock market or sometimes real estate in order to grow purchasing power over a long period of time and get to a place where your portfolio can cover your expenses by selling it down. And typically speaking, that is the way that they approach it, is that you're going to plow as much savings as quickly as you possibly can into something like the total stock market index fund until you get to a point where your portfolio is 25 times the amount of your annual expenses. And when it gets to that 25x number, at that point, you can start to sell down 4% of your portfolio every year in order to fund your expenses. You will have the same lifestyle that you've been planning for or that you've been enjoying right now, but you can quit your job and you can do whatever you want to do. You can go play golf, you can travel, you can continue to spend on the things that are enjoyable to you, but you don't have to deal with the commute and the job and the corporate life or the blue collar work that's very, very difficult on your body and all of those kind of things. It's a really great way to have an intentional plan for going from starting your career, starting your journey of personal finance, to having a very strong and solid end goal to what that looks like. I think some of the downfalls that people have when they're going through this journey is like, okay, well, great, I'm going to like really be intentional. I'm going to do my stacking sprint, which you should go read that newsletter article that I wrote. I'm going to do that for, 5 to 10 years. And then once I hit this number, I'm going to be free and I can do whatever I want. But people don't actually think about what they want to do once they reach that freedom and do retirement. So like Bitcoin puts you in a position where you actually can reach retirement level of assets much more quickly because it grows so much more quickly. And it gives you the sovereignty to actually own that money and not be dependent on other people. But you do need to actually have a plan for what you're going to do once you reach retirement. So that's kind of the advice that I've got for you right now with that question is, if you are a Bitcoiner and you're going through your like stacking sprint phase because you're saying, okay, this is a way that I can free myself from the, call it chains of the expenses that I've got. I want to reach a state of financial independence so I don't have to rely on a job or some other income generation there, and that you can then go off to work on your passion projects. Well, figure out what those passion projects actually are as you're going through this journey. Figure out how you want to spend your time and understand like, what is that actually going to look like? Because I think a lot of people get to that stage, they retire, and then they think, okay, well, I played golf now every day for the last 6 months, and now I'm bored. What am I going to do? And we have an opportunity as Bitcoiners to really shape the world in the way that we want it to be. So use that opportunity in a way that is very beneficial to you and the value set that you want to create for your community. And make sure that you've got like some goal in mind to keep yourself intellectually stimulated, physically stimulated, and that you can, use that time to spend with your kids or traveling the world and have a very intentional plan for what that looks like.
I think so too. Like, because I think a lot of people that are working a lot now and like then going in retirement, at some point they will start again going into project and they actually will have income again. And especially now with this kind of a world, whatever passion you have, you can monetize that passion now. And it, to a certain extent, it was always true, but it was never as easy as it is now. And,
totally
and
true.
so I don't know, like I feel like most people, don't want to retire. They want to maybe just like get free of the current thing that they're doing and kind of get an individual journey of like doing their passion project. And I have this crazy theory. If people just did that, they would make more income. And maybe I'm biased because like I did that and like it took me around, so like I quit my job after 3 months that I did the podcast. It took me another 3 to 4 months to kind of get to the same level of income. And after that, I got more than previously, but I still spend it on employees and on like freelancers and that stuff. So I still come to the same conclusion that I only want to earn what I earned before, and everything else I give back to the community and grow kind of the business. And so this is kind of my personal thing of like, if I look at revenue, I earn like 3 or 4 times what I earned before. because I just went into like what I really wanted to do, and all of a sudden, like all those small knots kind of get up, and then you're like, oh, you're actually really creative. You actually have a lot of great ideas. You could actually do a lot if you're no longer consumed with your energy in something else that you don't like that much. And so I have this crazy theory that if people just like did what they really like to do, and combine that with something practical where people like there's those like free diagrams of like a thing that you like to do, a thing that you can do, and a thing that other people would be able to like pay for it. All of a sudden you're like out earn your previous you because you're actually passionate about it and people can actually tell. So I don't know, it's a small tangent, but I think people would benefit a lot if just like they did something they really enjoyed doing, I guess.
I think you're absolutely right. And you're absolutely right that it's easier than ever to be able to tap into that third bucket, which is the things that other people are actually interested in. You know, in the previous world, you could find something that you're passionate in and that you're good at, but the reach that you might have for being able to actually monetize that or turn that into a business or income or some way to actually like get value back that is monetary in nature beyond just the satisfaction of doing it was so limited. It's limited to like kind of the local area that you are in, and that local area has a limitation of the number of people who might be interested in what you are good at and what you are providing. But now pretty much the entire world is available for you to kind of sell your skills and your personality and your entertainment value and all of these things that you might be passionate about into. And so it just opens up so many new possibilities for how you can build expertise, build a business and build income, especially when you're early on in your career, and then be able to like share that with the world in a way that other people will respect and want to trade their hard-earned dollars or money for as well. So, and then Bitcoin just makes that even easier to send that value over the internet. So we're still exploring how those monetization practices will work with Bitcoin, but the future is bright for sure.
And I ask this question every single one of my returning guests, and you're now a third time returning guest already. And the question is, what have you learned outside of Bitcoin since your last appearance? I think like 6, 7, 8 months ago, something like that.
What have I learned since my last appearance? Okay, so one thing that I've been focusing on much more recently, which is related to this financial independence journey that I've been on, is how do I get comfortable spending more? And this is actually a lot harder than you might think. What we go through when we are going through our stacking sprint, as I write about, or when we're being very intentional about the spending that we're doing and the saving that we're doing in order to build up toward a retirement portfolio or an investment portfolio that can actually cover your lifestyle, you build up muscle and the brain channels around that type of an approach to such an extent that it becomes hard to actually break out of it once you get to a place where you are financially free. And so I have been trying to kind of work some new muscles, which is how do I actually get comfortable spending more on the things that I want to spend money on that I would have otherwise foregone. And so whether that's like driving a little bit nicer cars or, spending a little bit more money on a steak dinner than I otherwise would have, just because like, hey, yeah, I'd rather get this like bone-in cowboy ribeye as opposed to the Delmonico, which is a $20 difference. Or, oh yeah, I'm going to add that truffle butter on top of that just because it sounds good. It's those like little types of things that I've started to try to work that muscle on, so that when I do get to a point that I have totally, kind of foregone the normal income that I'm used to, I'm in a position where I can feel much more used to that spending habit there. And so that's something that I've made some progress on, let's say, since the last time that we spoke. And I'll continue to work that muscle a little bit.
It's interesting. I haven't gone through that exercise. Like I I like when you look at the net worth of someone and you look like how it goes up, and if you try for like a net worth and like an income thing of the typical Bitcoiners, it's probably going up, and then the most are like really don't go up with the expenses, which is like a good thing in general. But there's also this thing that you should enjoy your life, and you should. You have worked hard for your stack, you've worked hard for your income, you have worked hard with all the things that you have done, and you should enjoy the truffle butter that you will
totally
deserve.
agree. I totally agree. Yeah, it's a lot of people, I think, look at this almost like a moral issue or something. It's like, oh no, you shouldn't waste money on frivolous things or material type things or whatever. Like, who cares what car you drive, all of that. I don't know. I think that if those are things that give you pleasure and you can afford to do it, and you've been very intentional with your plan to get you to that place, you absolutely should enjoy those things. Should you flaunt it and, be obnoxious about it? No, you should still be a respectable member of society. But there's also something to be said for just showing other people around you that, like, living by example, that, hey, look, this is a guy who had a very intentional life. He's got a great family and is focused on things that he's passionate about. And by the way, he's also like seemingly doing pretty well. And so, like, I think that's a good example to set for the world. We as Bitcoiners should show the world that it's a good thing to come into Bitcoin because it can help you to live a better life. And whatever your predisposition is toward having these like nicer things in life or not, like, that's totally fine. It's a personal choice, of course. But I think there's nothing wrong with driving a nicer car or living in a bigger house or whatever. Like, life is short. You should enjoy some of the finer things in life that other people have worked very hard to develop. Like, the world is so much nicer now because of all of the work and productivity that people have put into it. And there's nothing wrong with enjoying that.
100%. We have an routine also on the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And he kind of asked for, like, because we see a lot of government's involvement in Treasury and Treasury companies and even big institutions involvement like BlackRock in the game. He asked the question, will the Bitcoin adoption in the future years come from bottom up or more top down?
Bottom up or top down? I think it will continue to be bottom up. I think that more and more people are being exposed to Bitcoin as something that can be very beneficial for their lives. And it's just kind of a natural inclination to move their assets into something that they think are going to be beneficial. And there's only so much that, like, the top down world can bring in terms of kind of like forcing people to understand that. And that, the top down doesn't really have as much of as an incentive, I think, that some people think, to actually adopt Bitcoin in any kind of like speedy way. And we're kind of seeing this in the US government. It's like, even in the Trump administration, which has been very, bullish on Bitcoin, so to speak, and they've established this Bitcoin strategic reserve. Well, it's been how long now? And they haven't bought a single sat, it's for that reserve. And it's likely not going to happen. I don't think the Bitcoin Act is going to pass anytime soon, at least. And that means that, kind of establishing this national Bitcoin strategic playbook that a lot of people were hoping for is probably not going to happen. It's slow and cumbersome when you're talking about that level, and people individually and their families can be much more nimble. And we'll continue to see that play out into the near future, I think.
I think so too. And this is interesting because we do always have those. We have a very recency bias. We just see, like, this year, like Trump and like this and that with like Treasury companies, and we think, oh, that's the way forward. But also, Trump only happened because of bottom up adoption, not because of like Trump just decided to push it on the American people. He only talks about Bitcoin because he gets a lot of people saying to him, hey, Bitcoin is an important topic. That's why he decided to make it a topic also in his campaign, I guess. Like, I never know, but like for me, outside looking from Europe, inside looking to the American, it looked like there are a lot of people in his circle that said, like, you have to talk about Bitcoin, you have to go to the Bitcoin conferences, that's why Bitcoin is great. And he adopted it because from bottom up, people pushed him towards, and not he said like, oh, Bitcoin is my agenda and I want to push Bitcoin forward. I don't know if it's true because like I've never met the guy and I don't know what his plan really is. But just from outside looking in, I truly think like this came from bottom up. And so even government adoption, even if the Bitcoin Act is going to pass, this came from bottom up and not top down as I kind of see it.
Great point.
Really cool. Then thank you so much, Trey, for being on. Before I let you go, you have an amazing newsletter. Where can people find this newsletter, and where maybe can people also find you and ask you questions?
Yeah, absolutely. Well, you can follow me on X at @TS_HODL. And then, yeah, please go check out the newsletter. It's at firebtc.substack.com. There is a free, tier there, and then a paid tier as well, where I give some little extra content and that kind of thing. But it's all focused on helping people to build financial independence for themselves in a very sovereign way using Bitcoin, and answering questions about the different aspects of personal finance that I think a lot of Bitcoiners will get a lot of value out of. So some kind of controversial takes and that kind of thing in there as well. So I always try to keep it light and fun, and it's an easy read.
I always love controversial takes. Thank you so much, Trey, for being on. And also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.
This content is for educational and entertainment purposes only and does not constitute financial advice.